Miserable jobs report this morning. This is not what we were expecting at all. We were looking for 104,000 jobs and hawkishness from Powell. Even though Donald Trump posted on Truth this morning that Jerome Powell is a moron for not cutting rates, he says that all the time. So we didn't necessarily think it was a huge signal of anything to come for the jobs report. Certainly not what we just got blessed with. And I don't think it's much of a blessing. It's actually pretty damn bad. The only thing that's a blessing is that the coupon code expires tonight and you still have time to use coupon code release the files. But here's the scoop. We already know the headline. We were expecting 103, 104,000, depending on how you round and what the survey is. We got 73. Which is weak, but it's only weak by one standard deviation. But that wasn't the kiss of death. That wasn't the shocker. That wasn't what made us go, what the hell? It was the revisions. We lost 258,000 jobs in May and June. Gone. Evaporated. Last month, we were talking about the June report. Oh, strong report, 147,000 jobs. But when we looked at the details, you remember, because you watched this channel, you remember me saying, just be careful. Only 14,000 private payroll jobs were created last month. 14,000 were created, and we knew that last month out of that 147. That's because we had a big number on government and healthcare and some of these other sectors. Only 14,000 private payroll jobs last month outside of those sectors, government and healthcare. Well, now we literally revised the entire report down to 14,000 for last month. Over the last 2 months, we had negative 258,000 jobs and revisions. And this comes before the quarterly revisions via the QCEW, which usually take off even more jobs. We are now at the slowest pace of job gains since last August, which was right before the September meeting where the Federal Reserve cut rates 50 basis points. We might now be setting up for a 50 basis point cut this September. That'll be a game changer for House Act fundraising. We'll probably end that much sooner than we thought. We'll have to talk to the board about it. But anyway, remember, if you want to invest, go to househack.com, read the solicitation. The private sector added just 52,000 jobs on average over the last 3 months. Over the last 6 months, JPow's been bragging about how the 3-month average gains in jobs has been really great in the mid 150,000 range. Now it's just 52K on average over the last 3 months. In August of 2024, we were at 46,000, and then we panic cut 50 basis points. We're literally repeating what happened last year. The unemployment rate moved up to 4.248%, which initially looked like we just went up 1/10 of a basis point, of 1/10 of a percent rather, about 10 bips. But we actually moved up more than that. We moved up to basically 4.25, and that's with labor force participation falling. So maybe this is why JPow gave us that warning, hey, pay attention to the unemployment rate. That's what we're going to be looking at, because the unemployment rate just moved up, while at the same time the participation rate is falling, which is really weird. The participation rate is either plummeting, which you can see right here, from 62.7 last year to 62.4 in May to 62.3 in June to 62.2 in July. This is either happening because of the ICE raids and people are wanting to stay home, or this is people are literally just getting squeezed out of the labor market because the labor market is not doing so well. Now, a weird thing that happens when the participation rate falls, you actually mask a higher unemployment rate. If the participation rate were the same rate and more people were unemployed, the unemployment rate would be skyrocketing right now. So the only reason it's not skyrocketing is because of that participation rate falling. This is where JPow kind of gave us this, hey, there's less hiring, but there are also fewer people in the labor force. So does that balance out? We don't know. He kind of was giving us a hint of this report coming, but these revisions were way nastier than anybody expected. And so as a result, we now see the 10-2 spread back to 49, almost 0.50, shock level. We actually looks like hit 0.50 right here. And this is despite things chilling out over the last 2 weeks. People were very comfortable. Hey, the economy's doing better. Things are doing good. But this is starting to be an indicator that we're getting real cracks now in the labor market, which is the last leg holding this economy up. Frankly, if you really want to know what the real last leg is that's holding the economy up, it's the lack of layoffs that we're seeing. Once we start seeing layoffs, it's over. We're in a deep, dark recession that could take a long time to get out of because AI is going to keep the boot on this labor market. And it's going to, like, I'm not trying to bear, I'm trying to just give you a very realistic heads up. We're at the top of the market right now, okay? I'm not here to be a bear. I'm just here to say, oh, here it is. Look, the QCEW comes out September 9th. See, preliminary benchmark revision to establishment data comes out September 9th. So we're still a month away from the QCEW revisions. Yeah, and we got a negative 258 now. That's insane. You can see the 258 right here, which is crazy. But anyway, add layoffs to this. If it starts becoming socially acceptable for companies to lay off, rates are going to plummet. But that's not going to save the day. Yes, currently the stock market and futures are pricing in now it keeps going up. We are now pricing in an 85.5% chance of a cut in September and a 50% chance of a second cut in October. We are now fully pricing in 2 rate cuts for the year. This was a game changer jobs report. Holy smokes, man. Without healthcare, the last 3 months of payroll would be negative 53,000, negative 45,000, negative 300. We should have cut. This is why I'm kind of surprised Jay Powell was so hawkish. It sounds like he knew some of these components. I don't know if he knew these revisions, but man. Government payroll now down 6 straight months. Odds of a September rate cut now again. They just revised again. Yeah, 86.5%. Okay, that's just a flash up. 86.5% now. That was from the mid-40s after Powell's hawking just 2 days ago. But this is actually a sign that Powell is indeed earning his nickname, Mr. Too Late. Nick T tweeted that Bowman this morning told us that, here it is. Bowman explains her dissent in favor of a rate cut. Economic conditions are shifting. I see the risk that a delay in action could result in a deterioration in the labor market and a further slowing in economic growth. Taking a proactive approach in moving closer to neutral would avoid an unnecessary erosion of the labor market. Remember, folks, rate cuts don't stop job cuts. Rate cuts don't do it. Money printing does. But we're far ways out from the money printer. And so we really got to hope that this shock of a payrolls report isn't the beginning of a layoff cycle, because it just forecasts hell. Anyway, now we're going to jump on over to the course member live stream. We're going to do our alpha report together. We're going to talk about what the play is, the trades, the lines, because this is a crazy, shocking jobs report. We got to get into the details of it. So with that said, thanks so much for watching. We'll see you, and we'll be over at the course member stream in about 2 minutes.
Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.